How to make money in stocks in 2020. Investing in stocks is one of the most essential financial abilities you need to master. On average, stocks have an annualized return of around 10%. This rate, your money doubles every 7.2 years. Matter your income. You'll get rich off stocks as long as you start investing early, keep investing, and never sell. That's why we've compiled a list of basic ones you can do today to make money in stocks. Let's get right into it. The stock market is not sexy. The more you realize that the stock market isn't sexy, the more you start making the profits out of it. For 99.9% of people, investing in stocks is nothing like what you've seen in The Wolf of Wall Street. It's also not listening to the so-called political analysts on news outlets and purchasing their best supply of the season. Successful stock market investing is all about being cautious and staying on the market for several years to come. Stay invested in the stock market. Selling your stocks at least a fall or a loss could be the worst financial move you can make. When markets fall, everyone is worried about the next recession or how things are going to get worse. The stock market has always gone up every time it's gone down. So don't worry when it goes down. Trust how equity markets have always worked. When they collapse, try purchasing more stocks. Stop timing the market. People are trying to buy low and sell big. Even investment advisors are still attempting to predict the economy. This is a very challenging skill to be able to reliably distinguish peaks and falls. Even people who spent their entire lives trying to master it are not successful. It's impossible to do it consistently. The best way to invest in stocks. Recent report found that active fund managers struggle when attempting to conquer the market. More than 90% of actively managed funds are unable to beat the benchmark. So the approach to the index fund ends up earning a better return. They've also had less risk since you've been open to the entire market. The random company implodes and the stock goes to $0. It doesn't matter. They're a lot easier to manage, so the prices are smaller. Taxes are lower too since fund managers are not purchasing and selling all the time. Buying stocks is complicated. The odds of successful processing of individual stocks are too small. From 1926 to 2015, there were 25,782 independent stocks. During those 90 years, the stock market has risen by $32 trillion in volume. Half of the income comes from the top 86 companies. 86 out of the 25,728. The remaining wealth was generated by the top 1,000 stocks. It's about 4% of all the firms. The odds of success in purchasing individual stocks are very slim, just 4% of it. Have fun with 10% of your investments, but don't go beyond that. Keep the other 90% really boring. You're going to make a lot more money. Automate your investments. Automating achieves 3 purposes. First, you're not trying to time the market. Investing each month allows you to average your earnings and losses. It also makes the return smoother. When you invest every month, while the market is high, your money is still growing. The market is low, you buy stocks at a comparatively lower price, which will eventually rise. Second, you don't forget to actually invest. By setting up automated investments, you are fully embracing the set and forget strategy. You don't have to rely on yourself to invest. We all forget to do things. Investing failing to invest would deprive you of more gains than any recession. Don't rely on willpower or memory, have it automated, so you don't have to worry about it again. Third, you can spend freely on the rest. Through setting up an automated transfer to trigger right after you get paid, you never feel like you had the money in the first place. Set up transfers for investment and savings. Put aside enough funds for major expenses like rent or mortgage, and then spend the rest free until next month. The first step in making money through stocks. Armed with this new knowledge, you're in a great position to make money out of stock. The first move is to set up a brokerage account to buy stocks or index funds. Would consider Vanguard, TD Ameritrade, or Fidelity. They're all great options to launch your first account. Enjoyed the video so far? Don't forget to press the like button. It greatly helps out the channel. And also subscribe and click the notification bell icon for more content like this.